China makes about 90% of the world's high-performance rare earth magnets. The magnets inside every electric vehicle motor, every wind turbine, every robot, and every F-35 fighter jet. In April 2025, it weaponized that grip. New export controls sent Chinese magnet exports down about 75% in 2 months. The American answer is a company called MP Materials, and the response was extraordinary. In July 2025, the Pentagon became its largest shareholder and guaranteed a price for its product nearly double the market for 10 years. So MP isn't a normal miner anymore. The U.S. government floored its downside, but it trades at almost $13 billion on $90 million of quarterly revenue. Is this a guaranteed national champion or a stock that's run ahead of the build? Let's run the numbers. Start with why any of this is happening. China doesn't just lead in rare earths. It controls them. It mines over 60% of the world's rare earths, processes over 80%, and makes about 90% of the finished high-performance magnets. For sintered permanent magnets, its share is around 94%. That is not a market position. It is a choke point. And in April 2025, Beijing pulled the lever, requiring national security licenses to export 7 critical rare earth elements. Within 2 months, Chinese magnet exports collapsed by roughly 3/4. Western automakers, defense contractors, and robotics firms stared at empty supply lines. For the first time, the cost of depending on a single country for these materials became impossible to ignore. So, the United States did something it almost never does. It picked a champion and underwrote it. In July 2025, the Department of Defense bought $400 million of MP Materials stock, becoming the company's single largest shareholder. But the equity isn't even the most important part. The Pentagon guaranteed a price floor of $110 per kilogram for MP's core product, NdPr, for 10 years, nearly double the prevailing market price. If the market price falls below that floor, the U.S. government pays MP the difference, in cash, every quarter. Think about what that does. The single biggest risk in mining is the commodity price collapsing. The government just took that risk off the table. MP's downside is, quite literally, floored by the Pentagon. A price floor protects you from low prices. But the deal goes further. It guarantees demand. Alongside the equity and the floor, the Pentagon committed to buy 100% of the output from MP's new magnet capacity, 7,000 tons a year, for 10 years. It added a $150 million loan to expand rare earth separation. And to build that capacity, MP is constructing a second magnet plant, the so-called 10X facility, adding 10,000 tons a year of magnet production by 2028, funded by a $1 billion loan from J.P. Morgan and Goldman Sachs. So line it up. Guaranteed price, guaranteed buyer, and the capital to scale. That is not a commodity miner. That is a national champion, built on purpose. Here's the milestone that makes the strategy real. For decades, even when the U.S. mined rare earths, it shipped them to China for processing and magnet making because no one here could do the hard part. MP just closed that loop. It mines at Mountain Pass in California, the only scaled rare earth mine in America. It separates the oxides on site. And in December 2025, at its plant in Texas, it made its first commercial magnets, mine to separation to finished magnet, entirely on U.S. soil. No other Western company does all three at scale. Even Australia's Lynas, the main alternative to China, separates rare earths but doesn't make the finished magnets. This is the West reshoring the materials it can't live without. Next, we follow that chain into the sky, to the metal inside every jet engine. Howmet. Subscribe. So is any of this showing up in the financials yet? It's starting to. In the first quarter of 2026, MP's revenue rose 49% to $91 million. More importantly, adjusted EBITDA swung to positive $37 million, from a loss a year earlier. The company is turning the corner from cash-burning build-out to actually making money. The volumes tell the story. Record NdPr production, up 63%, and NdPr sales that more than doubled, up 117%. There are two engines now: the materials segment, mining and separation, and the newer magnetics segment, making the finished product. The second one barely existed a year ago. That's the ramp the whole thesis depends on, and it's finally underway. So step back. Why does MP deserve a special frame? A normal mining stock lives and dies on a commodity price you cannot predict. MP has had that risk removed. It has a guaranteed floor price, a guaranteed government buyer, and anchor commercial customers in GM and Apple on top. That combination is almost unheard of for a miner. The usual nightmare, you build a billion-dollar plant and then the price crashes, has been underwritten by the most credit-worthy buyer on Earth. What you're really buying then isn't a bet on rare earth prices. It's a bet on execution. Can MP build the plants, ramp the magnets, and grow into the role the government just handed it? The economics are de-risked. The build-out is not. So who else can do this? Almost no one. At the top sits China, the incumbent monopoly around 90% of magnets, with decades of processing know-how the West let wither. Then MP Materials, the only scaled American mine-to-magnet producer, now with a government backstop. The main Western alternative is Australia's Lynas, which runs the largest rare earth separation outside China. But it doesn't make finished magnets at scale. Below them sits a scattering of junior projects and startups, most years away from real production. So in the entire non-Chinese world, MP stands almost alone as a complete, scaled, Western supplier, and it's the only one with the U.S. Treasury effectively standing behind it. Now, the hard part: the valuation. MP is worth nearly $13 billion. It did about $90 million of revenue last quarter. Put those together and the stock is clearly not priced on today's business. It's priced on what the build-out becomes. That's the tension. The downside is genuinely protected by the price floor, but the upside is already largely in the price. The stock has swung from $20 to $100 in a single year. It now sits around $70, near the average analyst target of $80. And there are two real risks the floor doesn't cover. First, dilution. All this expansion is funded with new stock and over $1 billion in debt. Second, China could simply flood the market, crashing prices to make Western production look pointless. The price floor exists precisely because that threat is real. Let's put it together. On one side, the only scaled Western mine-to-magnet champion, a government that floored its prices and guaranteed its demand, a completed domestic supply chain, EBITDA that just turned positive, and a strategic need that only grows as China tightens its grip. On the other side, nearly $13 billion of value on $90 million of quarterly revenue, heavy dilution to fund the build, and the ever-present risk that China weaponizes price instead of supply. The stock near $70, a roughly $13 billion company off a range of 20 to 100. The strategy says national champion. The price says most of the good news is known. So, where do I land? In my view, MP is one of the most genuinely strategic companies in America. The thesis isn't really about rare earth prices. It's that the United States has decided it cannot afford to depend on China for the materials inside its weapons and its cars. And MP is the chosen instrument of that decision. That is an extraordinarily powerful tailwind. But strategic importance and a cheap stock are not the same thing. The Pentagon protected the downside of the business. It did not protect the downside of the share price. At nearly $13 billion, you're paying in advance for years of flawless execution and a build-out that runs through real dilution. I'd own the mission. I'd respect the multiple. This is a national champion whose only open question is the price you pay to join it. My base case for the next 12 to 18 months: volumes keep ramping, the magnetic segment scales, EBITDA grows, and the stock trades on China headlines and magnet output milestones. Watch 4 signals. First, NdPr volumes, record production and sales this quarter. Continued growth means the loop is filling. A stall is the first warning. Second, the magnetics ramp. The 10X facility adds 10,000 tons a year by 2028. Watch magnet output and construction milestones. Third, the price floor gap. The wider the gap between the market price and the $110 floor, the bigger the government's cash top-ups, and the more de-risked the model. Fourth, China policy. Every new export curb tightens the West's need for MP. Every détente loosens it, the biggest swing factor on the stock. Downstream, MP feeds automakers, robotics, and the U.S. military. The catalyst that lifts it, China, tightening again, and the magnet ramp delivering. The one that breaks it, a dilutive miss or a multiple that comes back to Earth. MP Materials is America's answer to a chokehold. China makes about 90% of the world's rare earth magnets and proved it would use that power. So the Pentagon made MP its largest shareholder, floored its prices, and guaranteed its demand, turning a single mine in California into a national champion that now mines, separates, and makes magnets entirely on U.S. soil. The catch is the price. Nearly $13 billion on $90 million of quarterly revenue, and a build-out funded by dilution. The bull case is a government-backed monopoly in the making. The bear case is that the market already knows it. One stock, all the numbers. No hype. I'm Big Z, follow me. See you in the next deep dive.